Welcome back to Question Time at Alhambra Investments. Joe, Steve, both here. It's been kind of a strange year. The first half of the year, we had pretty much large cap growth driving everything. Then, especially when we got into the beginning of the fourth quarter, it seems that somebody flipped a switch and suddenly small caps were working and commodities were working and everything was working. Now, then, we're at the end of the fourth quarter and it seems that the switch has been flipped again. How do you decipher all that, Joe?
I think people are crazy. No. Well, okay, maybe we can go into something a little more in depth. um, it is strange to me how well look we let me start like this way. We spend a lot of time thinking about sentiment. How do people feel about the market? Because we know markets are driven by emotions, greed and fear. That's the two everybody thinks about, right? Everybody's greedy, the market goes up. Everybody's fearful, the market goes down. And as Warren Buffett says, you want to buy when people are fearful and sell when people are, giddy. Um, uh, and actually, I like there's a better version of that was done by Sir John Templeton. He said, you want to buy at the point of maximum pessimism, you want to sell at the point of maximum optimism. Problem is, you know where those points are because people can be optimistic and get more optimistic. Look, there's a lot of kind of strange things going on. To your point about the divergence between, say, growth and value, you're right. I mean, if you look since the beginning of December, and actually I broke it down a couple of different ways. One way is to look at just the normal cap weighted S&P versus the equal weight index. Well, the S&P is up. Well, since the beginning of December, while the equal weight index is down over 3%. There's another way to look at it is to look at value versus growth. Value is down 4.5% since the beginning of December. And we're talking, a couple of weeks, down 4.5%. That's not an insignificant amount for any given month, much less 2 weeks. And at the same time, the growth index is up 4.5. So you got a 9-point spread in 2 weeks between value and growth. It's just enormous. Same thing with the NASDAQ's up even more, almost 5.6%. Just since the beginning of December. So it is a very, very wide divergence. Now, it doesn't extend to everything. Commodities have been fairly stable. Gold has pulled back some, not a whole lot. REITs seem to be doing okay, even though rates have gone up. So there are, it's not as widespread as it was in the first half of the year, where the only thing that worked was large cap growth. But I'm more interested, I think, in thinking about kind of the divergence between just speculation and investment. And this is something that's been ongoing for a long time, this shift. Essentially, I think that in a lot of ways, this is a reflection of our society, and it's about gambling. And you guys know me, I detest gambling. I think one of the biggest mistakes we've made in the last 25 years in this country was to legalize sports gambling, especially online. I think it is a cancer. It is an absolute awful mistake. And that gambling attitude has extended now into markets in a very, very big way. Now, mostly we see that in the crypto markets where you get things like Dogecoin, which was literally invented and set up by a guy in the crypto industry as a joke. He said, I'm going to make this thing so stupid that nobody will buy it. Apparently, he didn't make it stupid enough, because now it is, I don't know what the market cap is. It's in the billions, and it has no use whatsoever. It is absolutely useless. It's a picture of a dog. Now, I will say it's a cool dog. Shiba Inus are great dogs. But other than that, there's no there. But people bid for this stuff anyway. And the same thing is happening with some, I mean, this is a family, a family broadcast, so I'm not going to be too mean here, but actually, I'll go a different direction. There is a coin out there that was recently floated, which has, again, no value whatsoever, by a young woman, and it was, we don't want to go there, so we'll go to the other way. There's one out there now called Fart Coin. Fart. It's like I don't know, people are competing to see the most outrageous thing that they can put out there and say, hey, yeah, put your money in this. The crypto world is nuts, and it extends to Bitcoin too. I've said this many, many times. Bitcoin has no use, period. End of story. It's not useful in any way, shape, or form. Uh, Yet it is making new highs. Why is it making new highs? Well, because people believe that the new Trump administration is going to create a strategic Bitcoin reserve. In other words, they think somebody's going to buy it from them at a higher price. What does that sound like? Um, I, I don't even know how to respond to that. Why a strategic reserve? Strategic is a strategy. A strategy is a long-term plan for something. What's the long-term plan? Why do we need a reserve of Bitcoin? We have a strategic reserve of oil. That kind of makes sense. What do you need Bitcoin for? There's no use for it. The use is to transfer a lot of money from the public to a small group of people who own Bitcoin. Why do you want to do that? Well, because those people donated to Donald Trump's campaign, I guess. I don't know. Anyway, the point is, listen, I've got a whole bunch of sentiment things here. When we look at the market, it is very, very confusing right now. We're in this period between the election and the new administration. And it's very confusing. And I think people are trying to figure this out. And in some ways, I think it is getting figured out. If you look at, for instance, you look at interest rates. Interest rates have risen since the election. It has been a combination of nominal rates and real rates going up, which means it's a combination of real growth expectations rising and inflation expectations rising, and a little bit more growth on the growth side than the inflation side, but they've both gone up. And I think that's reflective of what people expect from the Trump administration. They do think that their policies are going to be positive for growth. They're also afraid that they're going to be negative for inflation. So I think that's reflected in the market. And I think that's what's trying to be worked out by the markets. This is what markets do. But now the divide between that growth and value piece, or the AI stocks essentially, or tech stocks more generally, and the rest of the market, that doesn't make sense, because if the Trump administration's policies are going to be positive for growth, they should benefit all companies. But the market's not saying that. So I started looking at some of the sentiment numbers, and listen, I spent a lot of time on sentiment because we do believe that that's how you're really going to be able to add some alpha, if you can get to that point where you're buying when everybody else is pessimistic and selling when everybody's optimistic. Well, right now, I can't tell you that. I can tell you a couple of things. Are people too optimistic? Well, Bank of America does this fund manager survey every month. In December, the allocation, the responses to this survey, and this is, I don't know how many billions of dollars, maybe even $1 trillion of assets under management by the people that take this survey. All-time high for asset allocation to stocks. All-time high. Not higher than .com. All-time high. And cash is at an all-time low. If you look at, we can also look at stocks as a percentage of total financial assets. We get that number from Fred. That's at an all-time high. People own a lot of stocks. But when I look at the market, I'm looking for optimism, extreme optimism, and I got to tell you, it's hard to find. There's some things that are kind of in the middle. I mean, I look at put call ratios. Put call ratios, the option markets is kind of my background. Puts are a bet that something's going to go down. A call's a bet that something's going to go up. When people are buying a lot of puts, they're making a big bet that things are going to go down. And so we watch a couple of different things here. We look at the index ratio of puts to calls. We also look at the individual equity ratio of puts to calls, and also overall. So what I look for, you can look at the index one, but the index one is the one, when you're looking at puts and calls on indexes, you normally have more puts being bought than calls, because that's how people normally hedge. They hedge a portfolio by buying an index put. When you're really looking for speculation, where people are really making big bets that things are going to go down, that's when that individual equity number goes up. And that number gets over 1, then you're probably getting pretty close to a low, because that means that people have spread out their bets. They're not just hedging now. Now they're actively betting that things are going to go down. And so, but we're not there. Right now we have 0.5 in the equity only put call ratio. It's nothing. And the index ratio is 1. 1.2. I would normally, if we were at an exuberant high, I would expect the index ratio number to be under one, and it's not. It's kind of in the middle. It just doesn't mean anything. When we look at things like highs versus lows, number of new highs, number of new lows, that ratio is less than one. That's actually fairly negative. It means people are kind of negative. You got more new lows than new highs. When you look at breadth, you look at the number of stocks going up on any given day versus the number of stocks going down. The breadth, 11 days, no, excuse me, 12 days in a row now, breadth is negative. More stocks going down than up. Even though the averages have been going up, S&P 500 has been going up, the average stock is going down. What else do I have here? It just, you know, it's a very, very mixed picture. And I don't have anything here that says we're at an extreme in either direction. If anything, I would tend to say that for the market overall, sentiment's kind of negative. And that's a little baffling to me. If you think that the Trump administration's policies are going to be positive for growth, why would you be negative on the market overall? I don't know. Like I said, it's a strange time. There are parts of the market, parts of the world out there where there's a ton of speculation going on, crypto, AI. Some of these AI stocks, I'll mention. Well, I'll say that for the last part. There's one stock in particular that really irks me because it's just absurd. But bottom line, Bob, you're right. We're kind of back to where we started the year. A little more. It's just the growth stocks going up, and that's all we got.
Well, Steve, with all these divergences, what do you think that means for the future of financial markets?
It's going to look a lot like the past. I mean, th this is actually fairly normal. That you're going to be getting mixed signals. I mean, kind of as Joe points out, you're looking for extremes where you really have a clear indicator of what to do, and just from the point of view of investing, and this is why we have a strategy. When things are mixed, we stick to our strategy. We have a strategy that we believe, based on our research and analysis, is going to work over the long term. And then when you sometimes get served up some situations that are extreme or where you actually feel the picture is fairly clear, and those are really opportunities to make some tactical changes. And my read from this right now is it's not such a clear call for a tactical change. I mean, think of taking an airplane flight. You get up in your airplane and you've got a flight path. Well, if there all of a sudden there's a big storm or another plane in the way, you alter the path. Think of that as a tactical change. But otherwise, you're just kind of flying the path that's going to get you where you want to go. And that's not so much fun to talk about. It's not so much entertaining. Yeah, it still could have some ups and downs to it. But to me, this is why you have a strategy, because most of the time the market's not going to serve you up extremes. By definition, extremes are extreme. So to me, this is kind of what you have to kind of expect that you're going to be operating in, and why you have a strategy and why you have a plan. Tactically, I would say, uh, Joe has mentioned valuations, and I think you do have some extreme valuations in certain areas, and that's a place where you maybe look at that as a storm. Maybe we're going to go around this pocket, not invest so heavily in this pocket, because evaluations aren't timing tools. They don't tell you things are going to fall apart right now, but they do give you an idea of, if there is some turbulence, how far could these things fall? Well, if you're owning something that's got fair value and it falls, that's a reason to buy more of it, really. If you're owning something that's really overpriced by models you have faith in, then you got a problem when it starts falling, because it could fall more depending on where your model prices it. So, you can do things like use valuations to try to kind of avoid things where you think, if the picture unfolds in a way you don't want it to, you could be stuck owning some stuff that really isn't good to own. So you can, and then there's other things we look at. I mean, one of the big things we look at is currencies when we're looking for really multi-year movements there, and when we still haven't gotten a breakout there. I mean, that's a tactical outlook that we can make adjustments to if we see it. But yeah, for me, this is kind of use a military acronym, SNAFU. It's a situation normal, and I won't say the rest of that acronym. But it's a mixed picture, and I think you just kind of stick to your strategy, and you keep looking for an extreme or something more clear to develop, and then within that, you do look for some pockets that might represent opportunity and risk. And I think Joe's mentioned some, because of a appetite for risk, let's say, that's been heightened over what it maybe was in the past, might be a little mispriced, and should really be looked at more as a trading opportunities for really good traders rather than investments. But that's kind of my look at this. It's a pretty normal situation actually.
Wow, there at the end, that was about as diplomatic as you could be. So, Joe, you've got some stock specific things that you've looked at. Tell me about it.
Well, yeah, I kind of to add to what Steve is saying too about having a strategy. No, look, everybody knows who we are. Uh, we're not speculators. We are investors. And so when we invest in things, we have to have some fundamental backing to what we do. We don't just buy things because we hope they're going to make $1 bajillion in the future on something. We don't just buy things that are going up. We don't chase performance, things like that. We have to have a fundamental reason for owning the things that we own. Well, if you're working off of fundamentals right now, you're kind of sitting here going, gee, I wish my stuff would go up, because nobody's interested in that right now. Everybody's interested in chasing the latest, meme stock or the latest crypto thing, or in this case, thinking about this one in particular stock called MicroStrategy, run by a guy named Michael Saylor. And it used to be a software company, although I say used to be, it is a software company, but the software company loses money, and it has lost money for quite a while. And of course, Saylor, I won't get into all the details, but he has had some run-ins with the SEC in the past. But he is being hailed now as a genius because he has been selling equity in the company and using the proceeds of and I should be more clear. He's has been selling convertible bonds. Convertible bonds, though, do convert into stock. So essentially, he's selling equity in the company, and he's using the money that he raises to buy Bitcoin. And it is not a perpetual motion machine, although it certainly looks like one right now. So if you just, like I said, people hailing this guy as some kind of genius for selling equity and buying Bitcoin because it's going up. But if you really step back and think for just a minute about what he's doing, he is selling bonds in the form of a convertible bond usually, but also selling straight equity sometimes too. And he is buying an asset that pays nothing, has no cash flow, has no business. There's nothing there. It is entirely dependent on people's attitude towards it as to whether Bitcoin is going to go up or down. So he sold all this equity and so forth, and the bonds too, and ultimately the bonds in particular, people are either going to convert, and the conversion price is really, really high, so they're probably not going to convert, or the bonds have to be paid back. So what happens if the price of Bitcoin goes down? Look, a Ponzi scheme looks great right up until the point where it implodes. I don't think Michael Saylor is a genius. I think he's actually a con man, and essentially, he's running a Ponzi scheme, and he's getting away with it. And so we'll see where that ends. I would just point out that everybody's betting right now that the Trump administration is going to have a strategic Bitcoin reserve. And I do wonder what happens if that doesn't happen. Actually, I don't wonder. If that doesn't happen, Bitcoin's going to fall a lot. Then I don't know. It'll be interesting to see how people feel about Michael Saylor then and how they feel about MicroStrategy. By the way, the stock is going to be added, or maybe has been added, to the NASDAQ 100. You think about that. It is essentially an ETF that owns Bitcoin. It's trading at a 50% premium to its net asset value, and it has been added to the NASDAQ. There's no underlying business there that's worth a damn. The underlying business was crap. It's losing money, and it's been losing money. That hasn't changed. But for some reason, the people that run the NASDAQ believe that this company needs to be in the NASDAQ 100. It is beyond belief to me that that's happening right now. It is not a company. It is nothing more than a big leveraged bet on Bitcoin. And I think that is probably the microcosm of where we are as a society. This is about gambling. It has nothing to do with fundamentals. Absolutely zero to do with fundamentals. It is about gambling. It is about placing a bet. Now, maybe it's about people feeling so far behind, so hopeless, that they think the only way they can get ahead is by making a bet and having it pay off. If that's where we are as a country, it's really sad. I don't think that's where we are. I think people maybe perceive that because Doing it the hard way, which is working and saving and investing, is hard. It takes time. Everybody wants to get this, they want to be rich now. And I think it affects our morals. I think it affects a lot of things that really we ought to really be thinking very, very seriously about what we're doing here as a country. When your only goal is to be rich and to say, it doesn't matter how I get there. It doesn't matter who I step on. It doesn't matter who I lie to. It doesn't matter who I con along the way. I think that's a very corrosive thing for our society. I don't know when it will end, but I can tell you that eventually this bubble of gambling that we're in will end. And when it does, there's going to be a lot of people wondering how they got into this mess and how they're going to pay back the money they borrowed to get in it. Because that's a lot of this is being built on borrowed money. Anyway, that's my editorial for the day, I suppose, whatever you want to call it, my moral crusade. I'm kind of fed up with it. And so we'll continue to do what we know is right, which is to invest. We're not going to be the most exciting thing out there, and we're not. If you want to own, Bitcoin, you're going to have to go someplace else. It's not what we do. And I'm proud of that, by the way. So, we'll see where we go, Bob, in the new year, and for the rest of this year. I actually think that in some ways there's maybe a buy here based on sentiment and the other stuff, and the non-speculative stuff. But somebody else is going to have to believe that too, or it's not going to go up. So right now we're just sitting with what we got.
The story's not over. We're going to keep watching it. So keep coming back to Question Time. We'll update you when we've got more that we think is right on the money to tell you.